profits, okay? So everyone see the dollar chart?
Yep.
All right, so I want to focus on the dollar here because, guys, I really think the dollar is a linchpin to everything that happens in metals, has a lot to do with other commodity markets, has a lot to do with interest rates, has a lot to do with the stock market. It's really kind of like the fulcrum or the linchpin that everything spins around. So part of this is not just the analysis, it's also the teaching. So this is a setup that could be, a great lesson. I put out, I talked about getting short around 95 on Thursday. The high was 95.20. We closed here. We could have taken partial profits. But to me, the market is at a very critical juncture. And right now, I'm going with this could end up being some type of right shoulder, a failing rally. And let me just also teach why I like 78.6% retracements. Because Monday, this was 78.6. Okay, remember I was talking about we could have a dollar bounce this week, last week, and we did. And I wasn't expecting this magnitude of a dollar bounce. I figured back to here. And that's when I said if you bought USD SEC to come out. Even traded the long side of euro successfully in a strong dollar market, which is kind of an accomplishment when you're wrong, but you're still right. And that's why break-even stops and partial profits are important. But this is 78.6 too, okay? So we retraced 78.6 of this, right? And then up here is a 78.6% retracement of this decline. And then ended up with a pretty negative reversal day. But for the week, still a positive week in the dollar. Okay, see the blue candle? So what I see here is we're either going to put in, I'm going to call this a neckline at 93.21. That we could look at this as a failing rally and maybe a potential head and shoulders. And what a coinkydink, we're looking for a head and shoulders here short term, while long term we've been talking about eventually getting some type of right shoulder here on the weekly. Okay, so that's still possible if we start taking out some of these levels like 94, 94.40 is going to be kind of a signal of weakness getting back underneath these highs at 440. But maybe there's a pop early in the week. Anyway, I'm going to go with this head and shoulders. And what's interesting about this head and shoulders is if it plays out and it manifests and eventually we have a breakdown under 93.20, the width arithmetically, I've always said if you could add or subtract and multiply and divide, you could trade because all you have to do is, add on the width of this formation, and from 93.20, it's 230, right? Okay, so from 93.20, it takes you just a shade to right around 91. And look at this. The left shoulder low is 91.01. So you'd have almost perfect symmetry if it was that deep. That would definitely take the euro up towards the 120 level and the pound 36-ish. So this is the teachable moment here now. So if you're short and you have partial profits, initially I said 3.5 stops above the double top. But now, if this turns out not to be a head and shoulders and we start taking out Friday's highs, I think it's a pretty safe bet, which, really what is in this business, that we will also take out these highs, which would then be a breakout that could take us to 97. Figure arithmetically 3.5, 5.5, 3.5 could take you to 97.5, 97. So if you're short right now, perhaps you don't just want to liquidate if it takes out Friday's high. What might you consider doing if it takes out Friday's high?
Going long.
That's right. So, it may depend on your platform, but say you're short one Dixie, and I'm looking at the Dixie because EG is sideways, and it's just I never know which one's going to be the relative strength leader or laggard right now. So, I just took the guesswork out of it and decided just to trade Dixie. So it's a CFD, it's available everywhere. And in America, it's a futures contract. So everyone can trade it. So how would you go long? Say you're short one Dixie contract. Do you just enter an order instead of having one on the buy stop, you reverse out with a 2 lot. Okay? So
Yep.
sometimes your best trades are failed formations. Someone needs to mute this. Wife is talking to them during an Eagle session.
I can do later.
Her. Yes, that lady. Okay, so mute your mic, please. So this is this.
Tell you that sometimes your best trades, and then we got interrupted. Sometimes your best trades are what?
Failed breakouts or failed formations. Okay, so how many times have we seen breakdowns that do not follow through and fail? It's a great trade, kind of like a stop hunt. You make a marginal new low, or a formation that you had a flat bottom, and say for example, this would be if we got under 93.20 for a day or so, people are going to call it a neckline failure, right? But if it just goes down for a day or two, Paul, and then we start closing back over 93.20, forget it. And why it's good is because you have so many people leaning the wrong way. Okay,
Yeah.
They're taking a signal on a breakdown, and 2 days later it's above the breakdown. It's a failed signal. And they're not just going to get. Most people will give it some before they cover their short positions. Will give it some tolerance. So it means there's more participants to squeeze than there is when it's just a liquidation break, and we just head down, and all the dollar bulls kind of give up on the way down. So be aware of false signals, failure signals, because that sets up a pretty dynamic trade, because you have people crowded on the wrong side of the market.
Got it.
Everyone else get that? So, instead of just getting flat here, this is a decisive moment in the dollar. So I don't know. I mean, we could come in 20, 30 higher and then just blow through it, or maybe we just start off lower and there's no follow through and we just blow through this level. If we blow through this level, we're going a lot higher. This was make or break Friday for, dollar bears, at least for now. Because if they don't turn it here, they are going higher towards that 97 level. Or maybe, it'll end up being a third drive, 1, 2, and then out here is some type of high. So I do believe if these highs are taken out, that there's, maybe 170 points on the upside. Okay, so you already have 30 made. If you took partial profit, so basically it's a winning trade being short and you're reversing getting long. But I think there's a chance that this happens, because I don't think the stock market is at a high, and that's something else I'll get to. But when I was covering at the beginning of the month, the end of last month, in my bearish ETFs, I said, we'll look to see where the market's at mid-month. Here I'm talking stocks, and we got the rally. I was surprised by the magnitude. 2-3 weeks ago, I didn't think I'd be talking about new highs in NASDAQ. but I'll show you what's happening under the surface that hasn't really shaken my conviction that a pretty good break is coming. But this is the dollar play. Okay, so euro pretty much looks the same way. Because this is 60% euro, right?
Right.
Okay, and the pound kind of looks the same way. So here's the pound. Again, put in a nice reversal day on Friday. In face, I said I'd be fading this dollar strength today. So the pound turned. This was the last rejection. It's 3.5 level. You have a 50-day here. We get through this, we're going to 36. So that would make the dollar go lower, right? 36 at least on the pound. Also, what did you have here? A little 1, 2, 3. Pretty good, right? That's
Yep.
a nice setup. I wasn't paying attention to it, but once you learn the method, you may be looking at different things than me. And this was confirmed. This diverged. This stayed above 30. Rallied to resistance, pulled back, and put in a higher low. But actually, the euro has been even stronger. I mean, the chart formation, not on Friday, like the pound outperformed Friday. But you see, the pound was making a new low here. See that? What's the date? Give me the date. Anyway, remember this spot, and then euro didn't. Okay, euro's keeps putting in higher lows. See that? Where the pound made a lower low. Okay, and look how much above these lows this is compared to the pound. The pound almost made a new low on Friday. Euro wasn't close, right? We're quite a few pips off new lows. So I like the euro, but action back under 116 Friday's lows, just like Friday's highs in the Dixie, going to point towards a lot of people talking 114.5. So you could do the same thing if you're long the euro from Friday. Your stops are here, and you not only get out of your long, but you reverse, get short, looking for 14.50. Everyone with me? Same trade. Okay. Let's go. So that's pretty much it for currencies. I mean, the dollar, the dollar kind of tells you the whole story, right? We're either heading down and developing a right shoulder, and, there's going to be a nice dollar correction. And the key word is correction. I'm not looking for the beginning of a bear market in the dollar. It's just a question of, did we bottom last week, or is there one more shot down, and how deep it will be? But above the highs of Friday and the lows in euro and cable, the dollar's on its way to 97, in my humble opinion. So let's cover something else that, as long as we're talking currencies here. I screwed up Blake's order of markets here. I want to show the yen. So the yen, I missed the whole thing on the upside. Didn't really get hurt on the short side. I gave up on the short side a while ago. I didn't reverse. I'm looking for the yen here. Let me go to sweeps. But I think the yen is also, poised to pull back at least. And here's another thing. Okay, isn't the dollar a better short, not making new highs, than the yen that's making a new high? We did the opposite before. When the dollar was making new highs and the yen wasn't, it paid to be short the yen more than the dollar, right? Because one of them is leading and one of them's lagging. So I'd say right now that the yen is actually stronger than the dollar. Would you guys agree?
Yep.
Okay. And, you know, we were talking about it, the FA guys, that all correlations kind of broke down with the end. I said, yeah, it's like, you know, it moved out of the house and got its own apartment. So, yeah. So you see this right here? That was the last pretty good dollar slide. Perhaps we get something like this from here. There aren't a lot of divergences. There's none there. There's some here. 1, 2, 3. Okay, so maybe we pull back. The breakout looks to have been about 11 and a half. Okay, so the end's also going to be the key. So you have divergences on the 1 hour and nothing on the 4, nothing on the daily. So I'd prefer to be short the dollar, which isn't making a new high. This was the last high in the dollar, or one of these. This is breaking out. The dollar hasn't broken out yet. So the preferred short is a weakness, always, right?
Yes.
Okay. All right. So that covers currencies for me. Any questions on any individual currencies? Like USD SEC last week talked about it could recover, and it actually did recover to where I thought it would go, and actually has recovered. I put out a sell it between 50% and 61.8 back. You know, that I was thinking this could be a failing rally. It looks like it could. Could we try 78.6 first? Yeah, but, you know, failed right between 61.8 and 78.6. And this could be a failing rally where we could get something like this from here. Okay. I think we're at least going to pull back to here. So, let's see what we have here. Yeah, I mean, similar day to the dollar, a little stronger than the dollar, right? But right now you still have to go with it. The 3 drive formation is the right one, and this is potentially just a failing rally. Everyone with me on that?
Yes.
Okay. You know, maybe it has 98.6, but, you know, I would say that if it has 78.6 and it takes out these highs, maybe the dollar index would. But it's also possible that this makes one more run to 78.6 without the dollar making a new high because it's stronger, right? I mean, this peaked out. Dollar had already peaked out in here, and USD SEC had one more jiggle to the upside, right? So it's kind of the dollar's leading it around, but it's showing more strength than the dollar when the dollar turns. Okay, with a bigger turn in the dollar, this was still an up day, right? Whereas the euro was you know, if it was equivalent to what the dollar did, it would have been a red candle. Or we had a blue candle in euro and pound, but this still was blue, so this is showing relative strength. But it still could be a failure. Failing rally off the 3rd drive, which was pretty classic. So talked about this high before we got there. Happened, manifested, talked about a break, being short, talked about a retracement coming this week. I don't know if you bought it or did anything about that. So that's right. So let's see. This was right, this was right, this was right. Let's see if I'm right again. And it fails and eventually takes out 86. Maybe heads towards here. 86 and 90 would actually take it all the way down here. Okay, so that's my currency view. Make or break with the highs and the Dixie and the lows in individual currencies like euro being pretty important going into next week. That's really the best stuff I have for today. Let's see. So, well, let's look at gold. I know you guys love only gold, like Goldfinger. All right. So, the first call when the gold shares didn't bottom was a much better call than this one, but they both worked. And I'm thinking Mike was probably short silver. He's looking to get short, so he probably did okay. But that was then, this is now. No losing trades in any of these, or at least what I was saying would happen, and how I supplemented it with Skype. But here's a dollar now. And this was a clue, really. It was a confirmed low. But what about now?
Non-confirmed.
Yeah. So what do we
I'm actually changed. I've actually gone long on both silver and gold recently.
Okay, did you catch a short side?
Yes, I did.
Did you catch a short side of crude under 73?
I did.
Okay.
That's under 73? No, I did not. I did not play crude this week, no.
Oh, okay.
That was last week, sorry.
Mm.
I'm actually thinking crude might turn soon, too.
Yeah. Okay, well, it's good to know that you're, still out there taking shots, Mike. Let's see here. So we have, if the dollar's going to turn, sometimes you have in markets, Ellioticians would call this was like three waves, which was bearish, a three-wave correction, and now you have a new low here. That you could have an ABC irregular, okay? And an irregular means instead of the B wave stopping at a higher low and then getting a push, it makes a new low, but it could still have all the properties of C wave and either have equality. Normally, when they take out the low, the C wave is normally more than equality. It could be 1.618. So I mean, this was a pretty big rally, wasn't it? 37 was like 37, $28. So 1.618 could be 40 from wherever this low comes in. So, right now we have 2 on the 4. We have divergence on the daily, right? All the 1240 guys have, a couple of times been shaken out. Could there be one more shot down? Yeah, could be. Bounce again and then get a 3. But this is where I think, remember how important 1280 was? I mean, I talked about this was not a bottom. I think Mike was long and he put in a stop, or he would have, as he said in his tweet, when he was tweeting, would have had a heartache. Remember that?
No.
Okay. Anyway, so here we go. I think there's, with the dollar, that there's something setting up here on the long side of gold. Let's see. The gold shares still haven't made new lows.
I had notes, Dale, that when we spoke, I think 2 sessions ago, you were talking about 1221 on gold. I have to mark that on my chart.
1221.
Approximately, yes.
Yeah, I don't think that happens before we have a pretty good rally. Actually, I think we're going lower than 1200. So I mean, when I look at this, and this is only bear market rally. Back to 1280. Anyway, the gold shares have not made new lows, if you've noticed. They might try it, but they haven't. So I'll just stick on the gold. So if it's strong enough to rally back to here or here, I look at this, call it 1285, 65 is what? 180 bucks from here gives you 1100, 1120. I think we're going for these lows. I have this line here. And then last week I said silver on the weekly at 515.80 that we were going to go at least to about 1450. So, these are just trades, right? If we get a pullback in the dollar, we get a bear market rally in the metals with it. Okay? And we're finally getting some kind of technicals that, gold, we could start off lower. It's still a negative week, right? Next week's off number in gold is 1252, which was a target I thought we might get to when I was saying buy it at 1343 here. And all we had was this little weak rally. Silver outperformed. So is silver diverging too? Yeah, it's glaring.
Mm-hmm.
Yeah, pretty glaring. So maybe silver rallies back to 1630, 1650, something like that, before it heads down to 14.5. And the dollar, looking for a decline in the dollar, isn't the end of the dollar rally, right? That I've been talking about for a long time.
Right.
Okay, so it's setting up what could be a huge dollar buying opportunity, even if it goes all the way down to 91, and it may stop at 92.5. It may not be going down. Then the metals are just going to tank. But I can't be short metals here. I think there's a nice scalp setting up on the long side of both of them. Okay, everyone with me on the metals? Kind of see how the dollar is really the fulcrum and linchpin to everything else that's spinning around it.
Yep.
So I've come to the conclusion that a weak dollar is better for the stock market. So I just want to show you. Everyone knows NASDAQ's made a new high, but let me just show you. And then I'll go to the S&P chart. That stuff I covered 2 weeks ago in here. This is the bank index, bearish, right? Didn't come close to making a new low. Okay, and that's with what the Dow's been doing. So the financials are still sick. They might work lower again, maybe even retest these lows, but because I think there's a shot for about 20. Now they're cleaning the clocks of all the bears over 28.01, maybe 28.20, 28.30. I'll show you the measured move on that as well. But you can see, again, trade selection. It's like, trading's like, I use the metaphor of American Idol or singing competition. You could have a great voice, but if your song choice doesn't fit your, who you are, you don't feel passionate about the song, and it's the wrong range for you, your performance is going to suffer, right?
Yeah.
Okay, so our contest is not song choice, it's trade selection. Okay, because just like you could be right about the movement in the dollar, but be long or short the wrong instrument because you haven't diagnosed what is leading and what is lagging. It's more forgiving if you've made a correct diagnosis. So there's the fact that I'm in, buying bearish positions, and the relative weakness in the market has been more forgiving then if I say like, and this is getting interesting, the Russell made new highs. So this made new lows. And the Russell looks like there could be something setting up here in TCA. Looks like we have 1, 2 right here. And also recall the Russell does better during a period of dollar what?
Strength.
Yeah, it's domestic, right? Okay, and it's a kind of people are looking at it as a tariff haven. I don't know. So maybe the dollar coming off, I don't think is constructive for the Russell. Or how about some fears subsiding about a trade war and that safe haven status that the Russell has isn't as necessary. I mean, the Russell is not making a new high with the NASDAQ. Okay? We failed. Right? I was looking for 170, 180 to 72. I was pretty confident we were going to get there. Now, I don't know. So a little double top in the dollar, a little double top in Russell. So TZA is looking interesting to me. And here's the SOX. I added to my SOX position this day at 1010. You know, it's just lucky, you know, bounce, pretty good, but not even close to the lows, right? It pretty much held 61.8 back. You know, maybe it's going to go 78.6 back. I don't know. Okay, I'll say I'll welcome it and I'll buy more. Okay, but it's like Paul said, the semiconductors, this used to lead the group, the NASDAQ, you know, because of NVIDIA and things like that that were, you know, that crypto needed all this, you know, I don't know if they were wafers or chips or whatever. So, where is it? Semiconductors. Amazon's making a new high right here. So that's what's carrying it.
That's confirmed too.
The fangs, yeah. So, okay, here's the semiconductor. All right, so NASDAQ's making new highs, and the last high was here. And NASDAQ has gone from here to all the way up here, and look at what the semis have done. Ugly. So I continue to accumulate, even if you pushed up to here. You know, it would take a lot of semi-strength. So let's just look at the S&P. Yes, a question I hear? Any questions? So I'm still bearish is the point. And because of my trade selection for being bearish, first of all, not trading the futures, but you know, a lot of stock traders would say I'm in a high volatility instrument, but compared to what I'm used to, 3 times leverage is kind of like, I don't know, a retirement play for me. Okay. You know, when you're used to 10, 20 times leverage and they go, oh, wow, this is 3 times. It's 3 times as fast. I think, well, thank God you know, it isn't, I don't have to take out a margin loan to get some leverage. So I still believe in these. And I think eventually a lot of these things are going to break out to the upside. The next top, they'll all work, Paul. Even the like the SQQQ is diverging at new lows on the daily, on the 4-hour. Not as healthy on the 1. But the larger ones are. So it hasn't bottomed yet. So what's the, we have 2 markers that would tell me to do something. The Russell that may or may not get to 170, 180, 172. And the next marker would be the S&P. finally got the grand prize of taking out the 2801. There was no way I believed after this break that I was going to be talking about this. And what's interesting is because of what I chose to trade, I didn't get hurt. I took partial profits, which then on this break in those ETFs, it was easy for me to I was hoping stocks would pull back to 10. That was a hope. And so when it did it, I did something. So this formation right here, last week's range, kind of this, we have this break here. So kind of arithmetically, high of 94, 32. So I don't know, about 32 from here is going to take it into the 20s. And as you can see, we're starting to diverge, and maybe this is 2 or maybe a 3. So I'm thinking 23.20 to 30. Okay, here's 2. That's pretty nice divergence. Not ideal, it's a shade over 70. But non-confirmation, right, in the S&Ps? See this? 1,
Yep.
2. Okay. Daily you can't use it because really the new high. So eventually I do think the S&Ps are going to make a new high down the road. But it could be from after there's a pretty good cleanse and they clean out these bulls, these bulls, these bulls, and maybe even these bulls. So basically, I'm still looking for something like this from wherever this ends. Equality of this.
What about this week, Dale, in regards to equities?
Yeah, exactly what I said.
Okay.
So I think, it's possible. Your first warning sign that, there's problems would be, I'd say, back under 2790, 2770. But the real number this was the key number, 2740. And remember when I was with us last week, I said it measured 2790. This was a 50-point formation. So, here was 90. So I actually think that as long as the dollar isn't about to break out and make new highs, there's probably something left. That's why I think there's another 20, 30 handles left in the S&Ps. So that's what I think. So you have those markers. You have a second drive, something to monitor. I think the next turn, all the ETFs will work, but I want to demonstrate that you're always better off shorting the relative weakness on rallies and buying the relative strength on weakness. Okay, that's real key. Because when you're early, it's more forgiving. If you short the wrong one, it just, it rips your face off. So do your work to also look at things and go, well, this one is making a new high, but this one isn't. Or this one's making a new low, but this one isn't. What's the market message? What's it telling that? What's the market trying to tell me? Start noticing things like that. Okay, well, everyone's thinking this is a breakout, but it's, it's above where it broke down, or it's below where everyone said it broke out. This is a failed signal. Where's the opportunity? So I'll open it up to questions now on any instrument or anything else.
How about the VIX?
Looks like we're setting up a 3. This is a 4-hour. I know some people are talking about it going to 8 and the NASDAQ going to 8,000. I don't think so. Let's see the 1 hour. Yeah, I maybe a new low here. I'd see where it's at, but you know you're starting to get some divergence. Let's look at the daily. Yeah, you see how it's kind of holding with the S&Ps. S&Ps were lower here um, than they are now, and the VIX is still holding this 12 level. I'd probably be looking for a place to buy the VIX here, and it looks like you have a rectangle here. Call it 12 to 20. So if we get through, wherever the low comes in, and I don't think it's any later. We were supposed to be looking to get short mid-month, right? Well, here we are. So should be, you know, those numbers should come quickly if they're going to come. But I certainly wouldn't be shorting volatility down here. So there's probably a shot, and then once it clears 20, it's got these highs coming, and then if it gets through 25, then we're talking about 35, and that's just a retracement from, even if you don't take the spike, you take it from here, 38 to 12, 26, 12, 15, takes you to 27 and a half or so, back up here.
Those leveraged long VIX are unreal when they take off. Oof.
Yeah. Well, good luck on that. I mean, I lost a fortune in TVIX. I didn't educate myself. They just eroded, and I'd be right, and I'd lose money on those. So
They're tough.
I've been, so far kind of healed from VIX products, but I think you're in the one that erodes the least. I think it's the VIXY, VXY. I'm not sure. But I think that we could at least get if we're going to take out the low, if that count is right and the S&Ps are going to new lows, what may be really the signal that it's not a crash is that we don't take out these highs. The S&Ps take out the Fed lows, right? They take out these lows. But the VIX doesn't take out these highs, and it's just a retracement move, in here. That would tell you, because I'm very bullish after this event, okay, if it happens, and we get that flush under the February low, I think then you have to be long for new all-time highs above 2,900. So I think that's when maybe, the dollar will have peaked. So I expect the dollar rally to be part of the cause of this. So everything depends on the dollar. If we start making new highs in the dollar, this break in indexes will happen sooner rather than later. And if the dollar's heading down, the S&Ps have to make hay while that's happening, and that's why I think there, still could be some upside left, because right now, with the evidence I have, I could guess and try and be Noster Pinkert and tell you where the market's going to come in Monday, and whether that high is going to hold or not, and I don't know. But I know what it'll mean if it doesn't, which is the key, I think, to everything we've talked about today, in my opinion. Any other questions?
Can you look at the Dow Jones?
Sure. So the Dow has actually been leading the way here. It was the weakest, and now it's kind of turned into the strength. It had the strongest rally this week, well, besides NASDAQ. What's this high? 25.4. Okay. I think there's another, could be another 400 or 500 points. Take out this high and then look for a failure and have your stop above this high. Okay, but I think we're going to take out this high first, which isn't that much higher. The high was 25.4, so that's about 400 points. So if the dollar's weak and gold rallies and everything rallies and Mike's right, crude bounces, all of that's going to be positive for the stock market. Okay, I'm postulating that a weak dollar is supportive for the market because you get the kind of it takes the pressure off multinationals for exporting. You get nominal gains because weaker dollar normally translates into higher prices. So I think a lot's going to have to do with the dollar in the next week or two. Hope that helps.
Yeah, thank you.
And then eventually I think we will make new highs, but I'm thinking we do this, just like the other indexes, it's just a matter of degrees. We do this and then we get something like this and then we explode to 30,000. Okay. So this is just a shakeout, a completion. I think this correction is incomplete. A lot of guys say it's complete and it's just going to go to new highs. And you know what? They can be right. But there are some undercurrents that are not healthy about the market right now. It's basically, 5 stocks keeping up a lot of the market. The internals of the financials not being in good shape, which I think are also kind of a fulcrum or, like the dollar is, the banking system, money velocity, all of that stuff is a pretty good indicator of how good the economy is. So the banks aren't making money. The yield curve is getting closer and closer to inverting. Maybe that's going to be the event. The yield curve inversion, I think we're only about a quarter point away from it being completely flat. So, I think there's going to be one round of fear. This didn't take long. It was a weekly chart. Happened in a couple weeks. So maybe it takes 2 or 4 weeks just to clean out everyone who thinks, this was a great buying opportunity. And they capitulate. They go, oh, wow, we're in a bear market. Some stocks are already down 10% from their all-time high. Now they're down 20. Must be a bear market. And then it's just an ABC back to, some type of retrace off this huge rally that we've had since the election of President Trump. And then we blow to the upside again into next year. And I think everything goes with it. I think you have 29, 30,000 Dow, 40,000 Dow. Inflation, it's got to be because of inflation. A reflation trade will come back and commodities may be hot for a while. And I think that when this does this, instead of gold performing, that this maybe into the fall is also going to create the longer term buying scenario for gold and silver, and the long term shorting opportunity for the dollar, longer term buying opportunity in the euro. So that's the way I look at the jigsaw puzzle going home this weekend, guys.